Hey everyone. So when I first heard about all these economists, saying we were going to have all this huge inflation because of these new tariffs, like, yeah, that makes sense.
Yeah.
But then I started looking into what the markets were actually doing, and things got a lot more interesting.
Right.
And that's what we're diving into today.
Yeah, how can we cut through the noise and figure out what's really going on? It's
Exactly.
all about understanding market signals. They can give
Huh.
us some real insight into, where things might be headed.
So let's start with that economist viewpoint. Higher tariffs mean imported goods get more expensive, right?
Right.
And those costs get passed on to us, the consumers.
Yeah.
Pretty logical, right?
Yeah, in theory, that chain of events makes sense. But what's fascinating is how the markets are behaving. If everyone was truly worried about a massive inflation surge, we'd expect to see certain assets reacting much more dramatically.
Hmm. So this whole gold thing is throwing me off. Isn't gold supposed to be like the go-to safe haven when inflation is on the horizon? Shouldn't investors be flocking to it like crazy? What am I missing here?
Well, that's the interesting part. Gold prices haven't really taken off the way you might expect. They're struggling to break through recent highs, which suggests that maybe investors aren't as worried about inflation as some economists are predicting.
Okay, interesting. So if gold isn't the hot commodity, what is?
Bonds, surprisingly,
Right.
yeah, we're seeing a bond rally, meaning bond prices are going up and yields are going down. Now, this is a key signal because bond yields typically move in the opposite direction of prices.
Okay, to be honest with you, I always get a little confused about bonds. Can you unpack that a bit more for
Well,
me and the listeners?
sure. Imagine bonds as like loans that you're giving to the government or a company, and the yield is like the interest rate you get on that loan. So when bond yields go down, it means investors are willing to accept lower returns, which usually indicates they expect inflation to stay in check.
So it's like investors are saying, hey, we're not so worried about prices skyrocketing in the future.
Exactly. And this bond rally is a pretty strong signal because it reflects the collective wisdom of a huge number of investors.
Okay, so we've got gold not reacting as strongly as we might expect, and bonds actually rallying.
Yeah.
What other clues are the markets giving us?
Well, let's look at oil. Traditionally, rising oil prices go hand in hand with inflation fears. But even oil is struggling to stay above $70 a barrel. It's not exactly screaming, inflation is about to take off, is it?
Uh-huh. No, it's not. So that's three major indicators, and none of them seem to be supporting the inflation narrative. And I'm guessing the U.S. dollar plays a role in all of this, too.
Absolutely. A strong dollar can actually help to tame inflation. Think of it this way. When the dollar is strong, it buys more of other currencies. That means imported goods become cheaper for us in the U.S.
Well, that makes sense. So strong dollar kind of puts the brakes on inflation by
Right.
making imports less expensive.
Exactly. And guess what? The dollar is currently on a tear. With a 7% rally in just the past quarter, that kind of strength points to a healthy economy, not one on the verge of runaway inflation.
Interesting. Okay, but here's where it gets really interesting for me. I was looking at some data earlier, and one thing jumped out. Transport stocks,
Hmm.
specifically ODFL and XPO, they've been absolutely crushing it lately. What's the story there?
That's a great observation, and it connects directly to this whole tariff discussion. You see, if we look at the bigger picture, the strength of those transport stocks
Huh?
could indicate a surge in domestic business activity.
So are you saying if tariffs make imported goods more expensive, businesses might turn to domestic production instead? And that means more goods being shipped within the U.S., hence those transport stocks going up.
Precisely. ODFL is up 11.8% in the past month, and XPO a whopping 26.8%. Those aren't just abstract numbers. They represent real companies potentially benefiting from this shift toward domestic production.
Okay, so let's take a step back for a second and make sure I'm following this. We've got economists sounding the alarm about inflation. But then we have these market signals. Gold, bonds, oil, the dollar, telling a different story. And on top of that, we've got transport stocks potentially signaling a boom in domestic production. What does all of this mean for someone listening to this right now?
Well, remember, predicting the future is impossible. But by paying attention to these market signals, we can start to understand, different perspectives on the situation. While the economists are focused on potential inflation, the markets seem to be saying, hold on, there might be another side to this story.
And that other side being a possible boom in domestic production driven by those tariffs.
Exactly. And this brings up an important question. What are the long-term implications of that shift? What happens if we see a major increase in domestic production?
That is a great question, and one we're going to dive into right after this.
Well, increased domestic production, it could lead to more jobs, economic growth, and even a resurgence in American manufacturing.
Okay, so there are some potential upsides to this. But you always like to look at all sides of the coin, right?
Oh, of course.
So what about the potential downsides? Could this shift to domestic production have any negative consequences?
Well, of course, there's always the possibility of, unintended consequences. One concern is that increased domestic production could lead to higher prices for consumers, at least in the short term.
So it's like a potential trade-off. Maybe higher prices for a boost in domestic manufacturing? It makes you think about those made in America labels a bit differently, doesn't it?
It really does, yeah. And it highlights the complexity of this whole issue. There are so many factors to consider, and it's rarely as simple as one side being completely right or wrong.
Yeah, speaking of different sides, I've noticed that this whole conversation about tariffs and inflation can get pretty politically charged.
Mm.
It seems like everyone has a strong opinion these days, especially on social media.
It's definitely a hot button issue. Yeah, we're seeing a lot of strong opinions and heated debates, which is understandable given the potential impact, on people's lives and livelihoods.
Absolutely. You've got folks on one side saying tariffs are the worst thing ever, that they'll destroy the economy. And then you have others who are saying they're the key to bringing back American jobs and prosperity. It's enough to make your head spin. So how do we navigate this information overload and make sense of it all?
Well, it's crucial to remember that there's always more to the story than what you see in a soundbite or a tweet. Reducing these complex issues to simple slogans doesn't really do them justice.
Right. So how can we avoid getting caught up in the hype and really understand the nuances of this situation?
Well, first and foremost, diversify your information sources. Don't just rely on one news outlet or social media feed. Try to get perspectives from, multiple sides of the issue, even from those who don't fit neatly into any category.
That makes me think of those echo chambers people talk about on social media. It's so easy to get stuck, only hearing what you want to hear.
Exactly. To truly understand something as complex as this, you need to expose yourself to different viewpoints, even if they make you uncomfortable. And don't be afraid to ask questions. If something doesn't make sense, dig deeper. Research the claims being made, look at the data, and challenge your own assumptions.
It's funny, we started this deep dive talking about tariffs and inflation,
Yeah.
but it's really become so much more than that. We're talking about how to think critically in a world that's constantly trying to tell us what to think.
This is the beauty of a deep dive. You never know where it will lead you.
All right, we've covered a lot of ground, but before we wrap up, I want to make sure we give our listeners some key takeaways they can walk away with. So if you had to summarize the most important points from our deep dive, what would they be? All right, so we've covered a lot of ground here. What are the key takeaways our listeners should keep in mind?
Well, I think the most important thing is to remember that the impact of tariffs is rarely straightforward. While economists often focus on the potential for inflation, the markets sometimes react in unexpected ways, suggesting there might be more to the story.
Like how those transport stocks are performing so well.
Exactly. It's also crucial to stay informed and, pay attention to those market signals. They can offer a valuable glimpse into how investors are thinking and positioning themselves.
So rather than panicking about the headlines, we should be looking deeper at how the markets are interpreting these changes.
Yes. And most importantly, don't be afraid to question the prevailing narrative. Think critically, challenge assumptions, and, form your own conclusions based on the evidence.
We started this deep dive talking about tariffs and inflation, but it's become so much more than that. We've explored how the markets work, how to interpret data, and how to think for ourselves in a world just overflowing with information. But there's one final piece of the puzzle I want to touch on before we wrap up, and that's the geopolitical implications of these tariffs. We've talked about the economic side, but what about the global power dynamics at play?
That's a great point. Tariffs aren't just about economics. They're also a tool of foreign policy. They can be used to put pressure on other countries to protect domestic industries, or even to try and reshape global trade patterns.
So these tariffs could have a ripple effect far beyond just the price of goods on our shelves.
Absolutely. They could impact relationships between countries, shift the balance of power in certain industries, and even influence the trajectory of globalization itself.
Wow. It's like a chain reaction.
Yeah.
One seemingly small change can have huge unintended consequences down the line.
Exactly. So as you continue to follow this developing story, and as you see those headlines about tariffs and trade wars, remember to look beyond the surface. Think about the economic factors, of course, but also consider those geopolitical implications.
That's a great piece of advice to end on. It reminds us that we live in an interconnected world, and our actions, even those focused on domestic policy, can have far-reaching consequences.
Indeed, it's a complex world, and that's what makes it so fascinating to explore.
Well said. And on that note, we'll wrap up this deep dive into tariffs and inflation. We hope you found it insightful and thought-provoking. Remember, stay curious, keep learning, and always, always think for yourself. Until next time.